Global share markets fell marginally overnight, despite some further news that we've seen plenty of mergers and acquisitions activity in the global marketplace. Overnight, the London Stock Exchange did announce that they are looking to buy the Canadian Stock Exchange, which would mean that they would become the fourth largest global exchange. They would also have plenty of power in terms of trading of energy and commodity products. However, the drag on equity markets is likely to have been a speech by the Federal Reserve Chairman, who suggested that while we've seen plenty of good news coming out of US unemployment over the past 2 months, it's still not improving as much as they would like and will be a drag on the US economy over this year. The New Zealand dollar dipped against almost all major currencies over the past 24 hours, however it is still holding above 77 against the US dollar. News and speculation out of Bill English during a parliamentary session on Wednesday won't have helped matters for the Kiwi dollar overnight. He did suggest that the New Zealand economy may have fallen into technical recession, effectively 2 consecutive quarters of negative economic growth in the fourth quarter of 2010. The numbers are looking a little bit meagre at the moment, with unemployment rising over the past quarter and the New Zealand economy going into negative growth in the third quarter of last year. While we may not go into technical recession, it's certainly going to feel like it in plenty parts of the country. The latest US Department of Agriculture supply and demand estimates should provide some fairly bullish news for grain and livestock markets over the next few days. Their estimates suggest that we will see very low stocks of grains in the year ahead. In fact, stocks are likely to be down to levels that haven't been seen since the mid-1990s. Even in the year ahead, if we don't see very high yields out of the US market, we aren't going to see any big improvements in stocks at the end of the season. So this likely will mean that we're going to see very tight supplies over the next 1 to 2 years for grains, and this will see further increases in prices. This should be good news for livestock producers, particularly for beef and for dairy producers around the world, but also good news for New Zealand farmers who generally use grass-fed systems.